Welcome to Market Momentum. We're here to cut through the noise and give you a really clear picture of what's driving the markets. Let's get right into it.
So, U.S. stocks are definitely catching a strong tailwind this week. But as we're about to see, not every market is sailing in the same direction. Let's dive in and see who's riding this wave and who's getting left behind.
First up, what's actually behind this big shift in market mood? Let's take a closer look at the key things that are giving investors a fresh dose of confidence. Okay, it really all starts with the latest jobs report. The U.S. economy added a really solid 119,000 jobs in September. That's a sign of economic strength that the market was absolutely desperate to see.
And this is a huge deal. Why? Because a strong labor market is basically the foundation of a healthy economy. It really helps to calm down those nagging fears of a recession, and for a lot of investors, that's like a giant green light to buy stocks.
And you can actually see this growing confidence in a key indicator, the VIX index. Just think of it as the market's pulse rate. When it's high, fear is high. When it's low, investors are feeling pretty calm.
And right now, that pulse rate is coming down. The VIX has been dropping pretty steadily, falling below that key level of 21. This is a super clear signal that fear is leaving the building, which, often paves the way for more gains.
Now let's see how all this good feeling is actually translating into price action on the major U.S. indices. This is where the story gets really interesting. The S&P 500, which, the broadest measure of the U.S. stock market, is flashing some seriously powerful bullish signs right now. It's like the market is just ticking all the right boxes. It's not just one signal, it's a whole bunch of them, all pointing in the same direction. It's taken back key price levels, it bounced perfectly off the Ishimoku cloud, which is a huge support zone, and we've got multiple momentum indicators pointing up. This kind of agreement is exactly what you want to see if you're bullish. And hey, this isn't just happening in the S&P 500. The Dow Jones is showing some very similar strength, which confirms this isn't some narrow rally. The Dow is basically mirroring what the S&P is doing. It's also trading above its key moving average and finding solid support. This broad participation is so important because it just reinforces the whole bullish picture for U.S. stocks. It tells us the confidence is spreading out. And even the tech-heavy Nasdaq, the one that had been lagging a bit and making some people nervous, is now showing signs of a really strong comeback. The Nasdaq has just bounced hard off a critical support level. This was an area where buyers were supposed to step in, and boy, did they, in a big way. With a fresh buy signal now flashing, it looks like the tech sector is ready to rejoin the party and maybe even lead it. But here's where the plot thickens. While U.S. stocks are just taking off, other asset classes are telling a completely different story. This optimism isn't everywhere. Over in the world of precious metals, both gold and silver are really struggling to get going. Instead of finding support, they're just hitting their heads on these resistance ceilings. This suggests that money is flowing out of these classic safe havens and into riskier stuff like stocks, which could mean more downside ahead for metals. The crypto market also seems to be just stuck in a rut. You'd think the risk-on mood that's fueling the stock market would spill over into digital assets, but it just hasn't happened yet.
Yeah, if you look at the major cryptos, the charts are kind of flashing some warning signs. Both Bitcoin and Ethereum have patterns that suggest the easiest path for them is still down. So for now, it seems like the smart play is to just stay on the sidelines and wait for a really clear sign that the tide is turning.
All right, so let's tie all this together. What are the most important things to take away from all this?
So the main thing to remember is this really sharp split in the market. On one hand, you have a clear bull run in U.S. stocks, and that's being driven by better economic news. But on the other hand, assets like gold, silver, and crypto are still just struggling to find their footing. And this leaves us with a really fascinating question to think about for the next few weeks. Are we just seeing a temporary lag here, or is big money making a more fundamental choice to just favor stocks over everything else right now?
That's all for this market update. If you found this analysis helpful, we'd really appreciate it if you'd hit that like button and subscribe for more deep dives into the markets.